Hey, this is Chris, founder and CEO of StockSpot, Australia's largest online investment advisor. Now, a question I often ask myself is, given there's such compelling evidence that index funds are the best way to sensibly grow your wealth over the long run, why doesn't everyone just buy index funds? And I wonder this often myself. In 10 years of growing and building StockSpot, ETFs and index funds have certainly become more popular, but still there's a ton of money trapped in high cost, underperforming, active managed funds. Why is this the case? And I think in my mind, there are probably three reasons why indexing and ETFs haven't become more popular. And the first one I would put down to availability bias. So what information people have at hand really drives their decisions. And what we see is that in the media and in advertising, active managers have the money to push their agenda and push their stories. And if you read any newspaper, you're likely to see stories from those fund managers that have outperformed, and you're likely to see ads in the paper from those fund managers that have outperformed. Inevitably, just due to statistics, there is always going to be some that have outperformed, but what's missing often in that story is how many have underperformed. And so people have a tendency to see these positive stories and therefore think that the chances of them ending up in one of those positive stories is much greater than it really is. There is not very many stories written at all about all of the funds that are shutting down every year and those that are underperforming. And so people don't really see their chances of success, which takes me to the second point, which is that I don't think people really know the odds. Most people, if you ask them out there, what is the chance of a fund manager doing better than just a simple index fund over the long run? I don't think get the right result, that actually 80 to 90%, and in some asset classes even more, underperform index funds over the long run. I think it's just not generally known information how poorly fund managers perform over the long run, how little chance you have of actually finding a fund manager that performs well. And even if you do, how little chance there is that they continue to perform well, and you continue to stay in their fund. And if people knew that studies like the Pension Fund Institute study shows that less than 1% of funds actually over the long run outperform and are able to overcompensate in returns to pay for their fees, I think people's behavior might be a little bit different. Unfortunately, the investment industry and the asset management and wealth management industries are highly geared against informing people about this information because there's so many middle people in the industry relying on people's belief in this area that it's just not information that gets out into the general public. Which takes me to my third reason, which I believe is why not more people buy index funds, which is even knowing the odds, I still think a lot of people would have a go anyway. Whether it's buying individual stocks or picking fund managers, people generally, and I think particularly Australians, love to have a gamble and think that they're going to be on the winning side of that gamble. So even if you know that you've got very little chance of winning the lottery, people will still buy those lottery tickets. And I think buying individual shares in Australia, hoping they're going to discover gold or make a biotech discovery, or get a drug approved or discover some new AI tool, that hopium that people have really drives the excitement of buying individual shares or tipping your money into a fund manager that you hope is going to beat the market. But ultimately that hopium in most cases doesn't result in success. But people will keep on hoping and keep on trying because of the hope that that gamble is going to pay off. And really, in my mind, they're some of the reasons why you don't have 80 or 90% of all money in index funds, because logically you'd expect that to be the case, but people still love to gamble. They don't know the odds. And the newspapers and the media basically makes people believe that active investing is more successful than it really is.